As always, before we begin one of these sessions, as you know, I have to draw your attention to the disclaimer, which I know you can see on the screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And I have said this in our other sessions, so I might as well say it here as well. And it doesn't matter whether you've got a few $100s in your account or you've got a few $100 billion in your account. The same rules apply in terms of risk and money management. And I'm sure you've all read what's been going on, what happened last Friday and what over the weekend about certain people in this industry on the institutional side being given access to massive amounts of leverage. And guess what? It's blown up in their faces. It can happen at any level. I think the regulators really do need to take a very close look of what is supposed to, has been going on or is going on of what's called the institutional or the so-called professional side, because those of us in the retail space know, how much, what we're not allowed to do, and in most cases, quite rightly so. And yet what's going on the other side are these, these ridiculous amounts of leverage that have been given. I don't even know whether this character even was trading the actual stocks themselves. I've read all sorts of things. I can't really get a handle on it at the moment. When I do, I'll certainly share what my understanding of it, but he was even trading them on the basis of CFDs, which are contracts for difference, which are, in the retail space, over the counter. Oh my goodness, as in Forex, such dangerous instruments cannot possibly be put into the hands of the retail market. You've got a few $100s, but okay if you've got billions on the other side. Anyway, that's my rant over for the time being. Okay. Obviously we're going to look at charts, we're going to look at stocks, but we're going to look at them through the prism of volume price analysis, which is the relationship between volume and price to tell us what is going on in the market, and more importantly, what is likely to be coming up next. And the concepts are in the book, which is up on Amazon, and those of you who come regularly will know there is also a companion book which is full of examples. This one that accompanies the book covers stocks, indices, and commodities. There is a version for the Forex market as well, because you can apply this methodology to all instruments as long as there's there's volume on your chart. The actual methodology here of this little graphic, the base rate, a volume, price action, candles, candle patterns, and support and resistance. The way we look at support and resistance is obviously price-based support and resistance, and we also have volume-based support and resistance with our VPOC indicator. And then on top of that, you can have your standard indicators. We've got our own. We've developed our own from that you can buy under the brand of Quantum Trading. I know some of our users are here today, and that's what you will see on the chart. I sometimes have moving averages on my chart. David doesn't, but as I said, it's once you've mastered volume price analysis, you can add to it whatever you like. You can use it with Elliott wave, you can use it with Fibonacci, you can use it with stochastic. It really doesn't matter. Once you've got to grips with that, the rest of it is fairly straightforward. Right, what are we going to look at? Let me just quickly whiz over to investing.com just to see what is going on with the indices for a sense of sentiment. If you didn't come along to the previous session, which was literally about 20 minutes ago, the first bit I really talked about what is going on generally in the market at the moment and what we have to pay attention to. Those of you, I know some of our Forex program students come along to these sessions as well, because in our Forex program, which is primarily for Forex traders, clearly, our approach is what we call a 3D approach, in as much that we look at the technical picture, we look at the fundamental picture, which are the releases, the economic data, and we also look at related markets and see how they may have an impact on the currencies and currency pairs that our traders would like to trade. This multi-dimensional approach is something that all traders need to be aware of. Back in the day when we started, as I said earlier, markets were in kind of silos. So, you know, you did commodities, you did stocks, you did bonds, you did treasuries, that was it. And I know they were in silos because we had a kind of get together where we used to live not far from the City of London, and we used to know a lot of people in the City of London. And we were speaking to a bond trader, and he was a very, very successful bond trader, and we kind of obviously talking about the market and what have you, but he only knew about bonds. Clearly, that's clearly important. He would know about bonds, but his field of vision was only the bond market. He didn't know whether what was going on in the forex, you know, the forex market in terms of the exchange rate to do with the US dollar. He was completely oblivious to what is going on in the stock market, and certainly had no clue what was going on in the commodities market. Now you might say, well, why should he? And the answer to that question is these markets, the money flow goes between these markets at such a phenomenal rate. You have to know, you know, what is going on. They're all interconnected, and each of these markets represents risk, if you like, in some shape or form. So you may be trading a stock. Clearly this is a stock trading, but you have to have a view of what the landscape is out there. Is it risk on? Is it risk off? Is your stock in what indexes is your stock? Is it part of, is it considered a tech stock, which is obviously the NASDAQ? Are you trading a small cap stock, which would be part of perhaps the Russell or in the S&P, or are you trading and looking at possibly a defensive stock, or what's called a value stock? All of those, they will all move in different ways depending on the broader market landscape. And of course, you know, if you're in the US and you are looking at a stock that is heavily influenced perhaps by the exchange rate in terms of the dollar. So if you have a strengthening dollar, is that going to impact your, you know, what is going on in your stock? We don't get to that point, you know, in 5 minutes. We all start with the chart, and we all start with an analysis of the chart using volume price analysis, but gradually your field of vision, your education, you know, what you have to look at has to broaden out. Now, what is going on at the moment? There's lots of things going on at the moment, but two things, as I said earlier, you have to pay attention to, because depending on the cycle, on the economic and business cycle, different markets, different pieces of news releases are more significant than others. And at the moment, there are two things I think you have to be aware of. First of all is what is going on in the bond market in terms of yields on the 10-year, certainly the 10-year, which is a kind of the benchmark one, because if yields keep on rising, eventually stocks will start to reverse, and reverse quite dramatically, because the cost of money, it becomes too expensive, and that's going to impact the bottom line for companies. Now the Fed it doesn't seem to be too concerned about this at the moment. When yields rise, under normal circumstances, what happens is interest rates then go up. The second thing you have to be aware of is, what is the Fed saying? What is Jay Powell and what are all the members of the committee? What is coming out of their mouth? Now, the markets may not believe what is coming out of their mouth, because the bond market will tell you if it believes that the Fed has everything under control, or as much control as it has, that it can allow yields to go higher, because its priority at the moment is clearly employment. Until the pandemic, employment was not a major, was not a priority, because as far as they're concerned, as part of their remit, they had the unemployment rate to where they wanted it to. Jobs were being created on a regular basis, and everything looked, happy in the garden, as it were. Well, the virus changed all that. So we are in this kind of unstable environment at the moment. Nothing is certain. That's all we can say at the moment. What is also interesting from terms of indices, and as I said earlier, normally the first thing we would do would just go to the S&P 500, or what's it doing? What's the VIX doing? Oh, it's definitely sort of risk on today. That doesn't happen quite so much these days. And one of the reasons is, and it's the reason I think, and in fact, I've just had it confirmed on my news feed by one of the news outlets, and that's basically saying that it's the NASDAQ. What is happening on the NASDAQ that is really setting the, if you like, the tone for sentiment? And if the NASDAQ is doing, is moving higher, growth, the money's going into its risk on, growth stocks are moving higher. And I would also possibly say what's happening in the futures market for the Russell. And the nice thing about investing.com, I'm not really know how to use this. I've not used this chart before, but this is the futures for the Russell. This is where the small caps are. And again, I would look at this and say, well, is it going up? Is it going down? That tends to set market sentiment. This is part and parcel of what I call your multi-dimensional approach to stock trading. So that's what I want to say about that. And just a bit of information that I came across earlier on, just to give you an idea of the importance now that retail traders actually pay on the market because of this huge influx from last year, moving on to apps such as Webull and Robinhood. There's actually done some research onto it that they say that that the popular retail trading apps accounted for 10% of the variation in stock returns in the second quarter of last year. That's when we had the rebound from that huge sell-off exactly a year ago. It says now retail traders, Robinhood traders, Webull traders, they tend to focus towards small cap stocks, generally because they're cheaper as well, and the consumer staples industry. Now, small cap stocks tend to be they're very volatile. They're not set up because that's why they're small cap. They're very speculative, and in a speculative market, if the market suddenly turns and sentiment, pulls out of these stocks into more defensive stocks, as it were, that's going to have an issue as well. And it says the outside activity of retail investors provided considerable liquidity to the US stock market. Now, that's brilliant, but what you need to do is have a solid methodology such as VPA to make sure that you are on the right side of the market. Right, so that's that. We've got some stocks to look at today. One stock, there's a couple of stocks actually. First of all, this huge liquidation that happened last Friday as a result of the, I don't know how you call it, is it Archegos, Mr. Huang, who had an issue with his margin call. One of them, I had a quick look at them. I haven't had a look at all of them, and I wanted to see on the daily chart whether there were any signals that were on there that possibly could have, would you have had any sort of warning or a signal of something that maybe something was not quite right. As I said, I haven't had a look at all of them, but I had a look at Viacom. Well, there we are. In fact, I looked at the daily chart, and this is what caught my eye. There we are. Right. Well, it's clear until this. Forget this for the time being. This is what happened last week. What do we see here if we just ignore that for the time being? Well, this is clearly a stock that's in a really, really nice uptrend. Now, what's happened with the volume under here is because of this is massive, and I mean it's just extraordinary. The numbers are just ridiculous. What it does, obviously, this has squashed everything and makes it, you think, well, there's not much volume there. Well, there is. It's been distorted. And this brings me to another point that I'd like to make when looking at stocks for day trading, and that is the significance of what you see on the slower timeframes, and in particular certainly the daily time frame and what kind of structure the chart is in. Now, and as I said, until this happened, this was really in a really, really nice uptrend. So if you were going to look at, if you had a stock like this and you were looking to trade it, what do you think you would trade it at? You would probably look to trade it with a bias to the long side. It doesn't mean there weren't significant pullbacks along this trend. Now, this is the daily chart, but you could have this, could be replicated on a 15-minute chart. It's exactly the same principle. So at what point does this trend, you think, well, it's potentially coming to a pause point? Well, let's go right back here. It was at the volume point of control. You've got some volatility. Volatility brings momentum into the market. So you have a weak sort of candle here because you've got a wick to the bottom of the candle, but it's and you've got volatility as well. But the signal didn't play out. We don't know what the volume was underneath it, whether that was high volume, because when you have a deep wicked candle, either to the top or the bottom, what you want to see is a lot of volume underneath it. It gives the candle more strength. From a price action perspective, that is definitely weakness, but you want that validated with a ton of volume. We saw an example this morning in the in our Forex session where we were looking at cable, and there was a really nice shooting star that came up on the 15-minute chart. You think, oh great, shooting star, jump in, go short, and it did reverse, but there wasn't a ton of, but boy oh boy, it just kind of fizzled. It didn't really go very far. So you see a signal like that, you do have to see a substantial amount of volume underneath it to give it extra validity, as it were. Then, in fact, that was, maybe the volume wasn't sufficient. It actually went high, another volatility candle. Then you had this one here, and with a wick to the top. And you can see under here, I know it doesn't look very much because of what's going on over on the right-hand side, but you can see that volume spike is certainly higher than the spike on the previous candles. And then we did get a pullback, a reversal. But there wasn't a lot of volume underneath it. You can see that it was also volatile. There was a lot of buying coming in. The following one, again, you've got a wick to the bottom, to the top. But again, the volume, nothing to write home about. It was off the volume point of control, and then you really get this really, really nice trend. This is what we call a sort of series of really nice soldiers. And I suspect underneath, you can't see it, but the volume would be consistent with the price action. You don't want to see it out of whack with what the candle is. That is an anomaly, and you just get a really, really nice smooth trend, steady trend. So if you were on a faster time frame and you saw that, you would think, yeah, what would your bias be? Would be to the long side, as it were. But as I said, you do have days when you have significant, it looks like from a price action perspective, pullback. And you look at the volume and say, well, is it a reversal or is it just a pullback in what we call this is a primary trend higher. The pullbacks, the corrections, are they simply a secondary trend, or is it a correction? That's all it is before the primary trend carries on. Now, what you do in the sense of, well, when do you then look to re-enter the primary trend? This is where your support and resistance comes in, and you think, well, there's the resistance there. This was actually volume resistance based on the VPOC. Once that clears that there, then the trend is actually re-established. We get another volatility candle back into the spread of the candle. Not a huge amount of volume underneath it from what I can tell here, and high. But this is the candle. As I said, we do get another shooting star candle, and it looks like, well, that was a lot of volume under that one there. But for the sense of the size of the candle, again, difficult to tell. Was it anomalous? This is where the concept of benchmarking comes in into VPA, and the examples book is full of what we call benchmarking, in as much that when you look at the range of a candle with the volume underneath it, what you need to do is go back to the left of the chart and see and get a sense of whether that range of candle with that volume, is this what this chart has produced in the past? Is it, is it consistent, is there a previous candle that perhaps you can compare it with? And if it's out of whack, then that becomes an anomaly. And in fact, then you had the anomaly with the shooting star. And from there, I would, you could deduce that possibly that maybe this was coming to an end. It's a huge trend. It's gone from $44 all the way to practically $100, which is a tremendous run higher. And you would say, you could possibly say, do you know what, maybe that's maybe it is going to reverse, and it did. And of course we had all the nonsense last week, which I really don't want to look at because it's kind of distorted what I wanted to say about using the slower time frames to maybe look at what is likely to happen in the faster time frame. So that is looking at where is a trend. I'm not going to do the when it's in a congestion. I will do that on another occasion, and I will pass over to David. Are you going to look at some of the thing? Right. What I was also going to say was, for those of you who haven't done so already, if you head over to my site and just go under stocks, I actually pulled up Harley Davidson because there's a really nice post on Harley Davidson on using the monthly chart, and it was in February. Right, you will find at least 2 or 3 times a week an analysis, different VPA examples on stocks. You tend to find them on the slower time frames because obviously price action moves too quickly on the faster one, but the same principles would apply. And we keep we're deciding there's lots of things we want to do in these sessions, but one of the things we, as I said last time, I'm trying to put together a little portfolio so that I can look at them every session and just see where we are in that in the progress, as it were. But I'm waiting for our indicators to be completed for TradingView. The trade we have until recently we haven't been able to have the VPOC, the accumulation and distribution indicator for TradingView, but they are done, and they've just got some testing to do and support pages to do. Because the great thing about TradingView, it is browser based, so you can use it on a Mac, you can use it on an iPad, you can use it on your phone. Not that I would possibly suggest trading stock. I know people do trade stocks on the phone, but for chart analysis, and I really want to use TradingView because it has access to lots of different markets as well. I don't have to keep going over to investing.com. So once they are ready, I will put together a little portfolio, and I'm also looking at, we are not mine, but together we are looking at some kind of, we talk about selection and the criteria for selection, and we're trying to bring it down to as simple as possible, and that's what we're looking for the future. But to go back to my chart, to my website, you will find these examples talk about Wyckoff, other charts, annotated charts. So they are they're of the moment, as it were. And go back and check out and see did the signals actually play out or not. It's a great teaching resource for you.
Hi everyone, hopefully you can hear me. Hopefully you can see my screen with a bit of luck. And Anna's just, oh, can you not hear me? Yes, no? No? You can? Terrific. Thank you. Hopefully you can all hear me. Brilliant. I just thought I'd pick up where we left off, really, focusing on the stocks, the indices, what is going on intraday, and in terms of the dailies. I've got intraday 5 minute across the top and the dailies down at the bottom. So I've got the YM, the NQ, and the ES. And again, it's one of those days where there is a little bit of divergence. This is what's happening on the NQ. It's been pretty bullish up till now, certainly from the open, from the get-go. We're now back up at the volume point of control here. There's a bit of weakness coming on this last candle, high volume, deep wick to the upper body. So we're expecting a bit of a pullback. Where is it going to go to? Probably sit down here for a little while. It's a very different shape to what's going on in terms of the YM. We had a terrific volatility trap at the open, ton of volume coming in, nice big wick to the upper body, and it's rolled over, gone past the VPOC, and the trend monitor's turned red, and it is on the downward path at the moment. So that is very much following what London was doing earlier on, which is quite interesting. But the NQ is ploughing its own furrow right now, and it's still got that bullish sentiment. If we drop down onto the daily, this is where the daily chart is, very different from the NQ and the from the ES and the YM. It's been around this region, the volume point of control, for a long time. We had this very strong level of what was resistance at that time coming into play. It's breached that today. I'll just move the chat box out of the way. It's breached that for the time being today. There's no question that potentially it could come all the way back down and close below it, but for the time being, that's what it's doing. There's a lot of buying going on in here through these levels, particularly with the lower wicks through here. Yes, we've had some weakness come in, but there's a lot more in terms of activity to the downside than there is to the upside. And really, the key for the NQ is where it gets beyond this level here, somewhere between 300 and 350 up here, 13,350, something like that. Because at that point, once it gets to that region, the volume sitting on the chart all the way down here, we get to a low volume node at that point, and it then falls away quite dramatically. So for this to get to that level in terms of daily timeframes, we want to see some decent volume coming in, some good price action, push it up here. But once it gets to this level, it will require less volume to get through this region up here, because it takes effort to get through the dense volume, which acts in the same way as price resistance and price support. Volume and price act in the same way. We're all familiar with price-based support and resistance. We've got it here on the chart on the accumulation distribution indicator. This is a very strong level. These are weaker levels. We're all familiar with price. But in terms of volume, it is the same principle, because this wedge of volume that's in here through this area here is acting as resistance right now to this market moving higher. Once it breaks through into this low volume region, then there's much less volume concentrated in terms of efforts, pending orders, whatever they may be, sitting in those areas, and therefore the price should move through there with much greater ease. In other words, less effort required to push it through. In terms of the dailies, very different. As I said, this is what's going on. We saw the buying coming in under here, pretty clear. We had a weak day there. Then we had the buyers rush in. Lots of volume under that particular candle. Nice deep wick to the lower body, little pivot underneath, and on up we go. In terms of where we are, we're trying to break out into new high ground, get through this area here, low volume above, and push on. That's where we are in terms of the YM, and in terms of the ES on the daily, similar sort of situation. It continues, in our opinion, to remain bullish. We have some big long positions in terms of the yen pairs, which we've had on for some time on that premise, and we are still holding them on the expectation the market's continuing to maintain the bullish trend that they have done longer term at any rate. So that's where we are in terms of the indices. So let's just go on to the have a quick look at the stocks. Let's just pull this one up. And I wanted to show you one in particular, which is this one, which is a company called MAS. They are in the DIY market, manufacturing, I think, from memory. It's not one we hold or trade, but the reason that I've pulled it up is because we did an analysis of this on Anna's site beginning of the week, I think, or could have been back end of last week, probably beginning of the week, I think. And basically, it's about picking off those anomalies. And Anna was talking about benchmarking, which we do all the time. And what you're doing in VPA is you're constantly looking at the chart and you're looking for an equivalent benchmark candle to give you an insight into whether the volume associated with that piece of price action is correct in alignment with what you would expect for that particular time frame and that particular instrument, or it's out of alignment. And the classic candle was this one here. And if you look at the volume down at the bottom here that was associated with it, it was very low in terms of the associated price action. And if you scan across the chart, you try and find another candle and say, well, what could I compare that with? Well, you've got this one, got higher volume. You've certainly got this one, much higher volume. You've got this one, which has got much higher volume still. So you've got, if you compare it with this candle, for example, and say, well, if that's my benchmark candle and I've got this much volume associated with it, And I now look over at this one, which is pretty much the same size, but the volume here is actually, it's maybe a little bit over half, but it's way, way off what you would expect for such a reaction in the market. And it's just anomalous. Now, what is that anomaly telling you? It's telling you that the market makers are not particularly participating in that move. In other words, the market's being racked up. It's obviously moved pretty dramatically. It was $2, pretty much $2 a share on the day. So it moved pretty rapidly. It's like a volatility candle. It's like one of these, only the volatility didn't appear. And in fact, we had a similar piece of price action here. We had a rapid rack up in volume on the day. The volume wasn't particularly significant, and then the market rolls over and we go back down again, down to the volume point of control. And that's what we said. We said, basically, look, if you're going to jump into that one, don't for the time being, because there is weakness there. The market makers are not participating. The price has shot up into congestion, and it's not weak. It's not racing up at the moment. So that is what you're looking at the whole time. You're looking for these confirmation, either that the price action and volume is in agreement, or it's in disagreement. If it's in agreement, fine. Whether you're looking at it in terms of a group of candles, whether you're looking at an individual candle, that's fine. If price and volume are in disagreement, then you have to question why, what is going on? Are the market makers or big operators not participating? And where you get the anomalous candles with wicks and all the rest of it, you're interpreting whether they're buying, moving into buy, whether they're selling, are they selling into weakness? Are they buying into weakness? What are they doing? And that's what you're following the whole time. It's as simple as that. Just get rid of that. In terms of trading it from an intraday perspective, it's exactly the same as you would trade any other chart. I've got 1, 2, 3, and 5 across the top here, and then down at the bottom here, this is 10, this is 15, this is 60-minute, pretty slow there, and this is over onto daily, which just popped up. So probably pop this one up full size, make it a bit easier. This is the pre-market. You've obviously got pre-market stuff going on. And now what we're seeing, we've come, this was the open, and it's all distorted because we've got these big volume bars over here. So I can't really, probably pull it out of the way a little bit. There we go. Makes it a little bit easier on the eye like that. This was pretty much the open. What did we see? Effort to rise, wick to the upper body, good volume under there. It's not looking particularly strong. And now we're rolling over. We've gone down to the volume point of control. We went through this potential platform of support on the accumulation distribution indicator. Remember, it's price-based. Went through there. Down to the VPOT, which is the fulcrum of the market, if you like. We had a potential platform of support coming into play, this blue line under here. We stopped there for 2 or 3 candles, then we've gone through that, so that now becomes resistance. And it's come back up to retest that, didn't break through, and now we're on the downward trend again. And it looks like we're going to break to the downside through this low volume area on the volume point of control. I'll just squeeze that back because it looks ridiculous like that. Just pull that back into shape. There we go. And we're just coming down to this low volume region here on the volume point of control histogram. And that's why you see on the histogram, when you get these low volume areas, that's where price moves pretty rapidly through them. And as a trader, that's what you want to see, because if you're looking at it and think, okay, now where's this market going? I mean, if we drop down onto the 15-minute, for example, we're just coming into another low volume area here. So if we're trading this short at the moment, that's a positive sign. It's falling away on that particular time horizon. So we should expect the market to move through there, this particular stock to move through there pretty rapidly. There's not much in the way of volume to act as support at that point, all the way down to, I know this isn't a huge price move, 65, so 10 cents down there, 15 cents, whatever, before we start to get to potentially a support area coming into play, this time from a price-based perspective. So this little area here has been tested several times. It builds on the accumulation distribution indicator in terms of thickening the line. So these thick lines here are not done by me, they're done by the indicator. Automatically, every time a level is tested, it thickens. So these are significant. This one here is less significant. You can probably see the little 1 there. So that's been tested once, not hugely significant in terms of support, acted over here. And then you've got another one below it. So in terms of looking at this for an intraday scalping opportunity, if you will, to the downside, the analysis certainly on this, just on one chart, is pretty straightforward, because you're looking at it and thinking, okay, well, that's fine, that's good. Is it going to get through here? Is down to 50 enough for me? Is down to 40 enough for me? And it's looking at the chart and analyzing in that way. from an intraday perspective, or indeed any perspective. It's what can this chart deliver, and what is going to cause a problem for the price action on the time frame that I'm trading, which might bring it to a halt. Am I approaching a VPOC? Am I approaching some heavy volume on the VPOC histogram? Have I got price-based support and resistance above or below? You know, where is it all? And have I got a clear water trade that's you know, will fulfill my risk potential in terms of I'm prepared to put this on the table? And you look at the chart and study it from a perspective of how much do I think this chart can deliver in terms of potential return, and not from the risk reward ratios that I know a lot of traders use, which I'm afraid, well, I'll be polite, we don't have a great deal of time for. Look at the chart and decide based on the chart how much free water there is in terms of where you are now and what is going to come to cause that stock or whatever it is you're trading to pause and ingest a particular level and cause you grief and emotional pressure which you don't actually need. Let's just flick on to Apple. Apple's at an interesting point at the moment. Just wait for that to load up. Just head on up to the daily. It's trying to break free at the moment. It's been in congestion for a long time. That's the congestion for Apple. This is on the daily chart. You can see the volume point of control here, the yellow dashed line with the heaviest volume going right the way out there. So that is the fulcrum. That's where we've been for a long time. Pricing is just oscillating around, but the key point now and this is from an intraday perspective, and it kind of picks up on the point Anna was making about looking at the daily charts to give you a perspective on intraday trading. This is coming up to a very strong level here, just above 123, and it's being tested right now. Now, if you're an intraday trader, of course, that is going to have an influence because, as we always say, time carries weight. So if you're on a 5-minute time frame, a 15-minute or a 30-minute or an hourly chart will always carry more weight than your time frame because time is significant. Anything that happens over a longer period of time automatically is more significant. It's just the nature of trading. So if you've got some significant levels on the daily chart, which we have for Apple right here, that is going to be significant in terms of what is going on if you're an intraday trader on a 5-minute chart or a 15-minute chart. It's as simple as that. So that level has to be taken out, and it's got to be taken out with confidence. Obviously, if it is taken out, then it becomes a decent platform of support, and then you're into all the other analysis up and down the chart. So I just wanted to highlight that because it's literally coming up right now. You can see the trend monitor is blue across the time horizons, across the faster time horizons at any rate. Went into a period of congestion here. We didn't go into any other color. We didn't come out the other side and go into bright red or dark red even, just simply signaling that, yeah, we're in congestion, but we look as though we're coming out the other side. We're turning blue again. This is blue. You wouldn't expect it to change very much there anyway, because this is a slower time frame, the same on 5 and the same are down on 10 as well. So in terms of trading that intraday, we're coming up to some nice low volume stuff here on the 10-minute time frame, which looks you know, encouraging for breaking through there and seeing the stock push higher. That's not to say, obviously, all stocks don't rise and fall with the rising tide, depending on what the primary index is doing. But obviously, it will have an influence on some, greater on others, less so on others. Let's just go back onto the indices and see what's going on there. Okay. Looks as though the NQ is trying to break free from the volume point of control, so it's maintaining that bullish momentum. Looks as though it's going to be joined by the ES, and that may enough to pull the YM up as well along with it. So you've got all three moving in pretty much the same direction, but from different levels. And in terms of what's going on in the daily, I mean, that pretty much sums it up. You can probably hardly see it. That's a razor blade of price action up there, absolutely tiny. That's on the YM, but on the ES and the NQ, you've got a nice widespread up candle on the NQ, less so on the ES, but nevertheless, it's maintaining that bullish momentum. And just checking over, let's just have a quick check-in on what's happening in terms of yen sentiment, which I had earlier on. This is what I was looking at earlier on. This is just a snapshot of sentiment. What is going on in terms of sentiment, in terms of the yen particularly? I'd have it isolated out in terms of dollar and also Swiss franc, obviously the main risk currencies. It's pretty strong at the moment. The CAD yen's leading the way, New Zealand yen. It's not quite as strong as it was, maybe dropping away a little bit, certainly in terms of dollar yen, but in terms of the other 6, then that's what's going on in terms of sentiment. So it's pretty bullish across the piece for the time being. Just go on to the multiple time frames, got the NQ here. So I've got this spread now across 15-second, 1 minute, 3 minute, 5 minute, 10 minute, and 15 minute classical arrangement. Very straightforward trading right now. The trend monitor's blue. Look at that little move down there. What was that telling you? Volume falling away. It's anomalous. Why is it anomalous? Because if that market is really going to reverse strongly, then you want to see that volume rising, and it isn't, it's falling. So, it comes back to this whole principle of anomaly. Is price and volume in agreement? Doesn't matter whether you're looking at it from a one-on-one perspective or groups of candles, whatever it may be, it's still the same principles still apply. Bit of selling coming in now. We've got two bars down, volume rising. So, that's it's telling us that there is a little bit of selling coming in, but it's nothing more probably than profit taking. This has been a decent move so far. Nice rally. Trend monitor keeping you in, and that's what we developed the trend monitor for, specifically for that reason, to keep you in a trade, not to get bounced out when you get to those pause points, those reversals and everything else. I've got it. I've got the NQ on up here on TradeStation. This is being driven by interactive brokers. So I've got my IB feed straight through to this. It's on it's called TradeStation Global. We've got pretty much all the indicators here available too. The nice thing about this sort of arrangement is I've got the time and sales going through here, so I can see the volumes going through on here. I'm looking for anything above 50, 60. I'm not interested in these 1s and 2s. What I'm looking for are the big numbers going through here and the reaction of the market over here in terms of the index. What does it do when these big numbers go through on time and sales? This isn't the ladder, this is time and sales. These are orders actually executed through the market. So they are real orders, if you like. You've got a couple of 39s gone through there. That's significant but not huge. It's when you get a triple figure go through and you just see what the reaction is. But the nice thing about this arrangement is this is the NQ across a whole array of time frames. I've got 1, 2, 3, 4, 5, 10, 15, 20, right the way through. I've got the trend monitor on here, and I've got the trend dots on here. You can see the little trend dots here. They are very close to the price action. They will move, they will transition first, and two things will happen. First of all, they'll change color, and secondly, they will rotate from the bottom to the top if it's a downside move, and the other way around if they're going upwards. Or reversing upwards rather, and in addition to that, they also transition in color into congestion colors. When you get into a congestion phase, you can see it down here, they change to white, and then they're back out into blue again to the underside of the candle pushing up. That's how they work, but they work very close to price action. So they're giving it an instant heads up in terms of changes in trend very close to the price action, whereas the trend monitor down here takes a much more considered view. You can see it through here. We had the transitional colors on the trend dots. The trend monitor, it had some fluctuations because of that particular reversal. It even went to darker red, but it never came out the other side. It went back, it didn't go into bright red, in other words. It came back out into bright blue, at the other side, dark blue, and then out into bright blue. It doesn't automatically figure that it has to go from bright blue to dark blue and dark red, and then out the other side into bright red or vice versa. Generally speaking, it does, but not always, and sometimes if you get a quick snap reaction, then it will change very much more quickly in terms of color changes. Volume is exactly the same. Nice volume under that candle, big widespread up candle. Good. That's in price and volume in agreement. That's fine. Nothing wrong with that. Nothing to frighten the horses. But the nice thing with it is very, very quick to scale through. So you get an instant color regime of what's going on in terms of your trend bar or the trend monitor, what's going on in terms of your trend dots in terms of color. And over here, I've got the dynamic volatility indicator, which tells me where my last volatility candle was across the time horizons. I haven't got any up here on the faster time frames, which is fine. But if I was to go down here onto, let's go to the 15 minute, for example, just click on that. Wherever it is, there we go. Let's click on that one. And that should come up. There we go. Sorry, I've got such a lot of data here. That's on 15 minutes. So we're now looking at the 15-minute chart for the NQ. And what were we looking at here? It was the volatility was 4 bars ago. So it was basically this one here. And obviously that would have drawn your attention if you're in that trade. Do I close out? I mean, I've said it so many times. If you're in a profitable position and you get a volatility trigger, close out. Jumping back in is a piece of cake. It doesn't cost you anything. The cost of trading now is cents. You know, it's nickels and dimes. It's not dollars. So you just jump back in. You take your profit off the table. Or alternatively, if you're scaling out, take some off the table, leave some to run. So if you've got 4 or 5 contracts running, take 3 or 4 off the table, leave 1 to run, back that profit, wait for the market to settle, and as it clears away, fine, you can jump back in and carry on with the trading. It's as simple as that. If you're in a loss-making position, you get one of these triggered, that's a more difficult decision. You have to decide what to do on that occasion. But it's just a really nice way of seeing it all visually. You know, it's all blue at the moment. Let's just step down back onto faster time frame. Let's go to that one. That's on 3 minute. There we go. And you know, on we go. And we can go. You can whiz through the charts very, very rapidly. Works in exactly the same way. Got the volume point of control here. We're breaking away from that. Good volume under that last candle. Bit of buying coming in under that one. There's a wick there. Maybe can't see it. There's a bit of wick there. And we're breaking up into low volume in terms of volume point of control. Moving on higher. Just see what's going on down here. So if there's any particularly significant running through the window. Some big numbers gone through there, 75 and 76, very nice. Right, let's go back on to where we were. Let's just see what's happening. We're carrying on up, all looks good. That's fine, that's the NQ. And just see if that's pulling the other 2 up as well. Does seem to be, yeah, that's nice. And the yen pairs we're in, that's great, so it's good for us. We've got some big positions on, which we've been holding for months. And they are very, very, very profitable. And we're continuing to hold them, simple as that, because we see this as a longer term bullish sentiment for lots of different reasons, for the big picture right the way through down to sort of intraday at the moment. Let's just go back to see what's happening with Apple. Let's just let's just pop that up full size, make it a bit easier. It's there or thereabouts. It's trying to push through that region, but it's finding it a bit of a struggle, as you can see here, and that's the reason why. And if you're not aware of that down here, and you're trading up here somewhere and thinking, well, why has this come off? You know, that it's certainly one big reason. You've also got another one here. This is on the 60-minute. Why is Apple struggling? Well, you know, we had a volatility. You may not be able to see it. We've got a volatility trigger here, top and bottom. That's the little purple triangle there. So it's no great surprise. We expect one or two things, either congestion to follow or a possible reversal. And if we get congestion, then we've got to wait and be patient and wait for it to break away from that particular candle. Just see if we've got any questions. Right, I think that's about it. Excuse me for my voice is. There we go. Right, just to wrap up very quickly, just to show you where all the bits and pieces are in terms of where we are. There we are. That's us, that's quantum trading. You'll find all the indicators here at quantumtrading.com, up the top left there. MT45, NinjaTrader 78, TradingView and TradeStation. The one I was showing you earlier was TradeStation Global, which is with the interactive brokers feed, but the indicators are also available for TradeStation Securities, which is the data feed from TradeStation themselves. Immensely powerful. The radar screen with TradeStation Securities, you can have up to 1,000 cells operating, so you can have 1,000 stocks or whatever it may be on there. On the TradeStation Global, it's 400. We are working our way towards getting TradingView complete, so we've got the VPOC that's come out of beta now and is on test, and the last one we're doing there is Renko. So at that point, the TradingView package, which, as Anna said, you can use on any platform because it's browser-based, will be comparable with the MT45 platform. If you haven't invested in the TradingView, it's not a bad time to invest because you get all those indicators free of charge. You'll just pay the current price, which I think is $677 for the full package. So you get all the other indicators. That's the Forex-specific ones. That's the VPOC, the accumulation distribution, and also the Renko, which hopefully I'll have up next week, be able to show you that one. So they will all be available. In terms of Anna's site, that's Anna there. That you'll find all the analysis, annacooling.com. And all the links to the books there on Amazon, either in Kindle format or in paperback. And this is the Forex program over at Quantum Trading Education, where we cover everything. We cover all the markets, all the fundamentals, the psychology of trading, the mechanics of trading, and we've even bolted on this funded Forex program now, which allows you to trade our money. So there's no risk to you. You trade our money, not yours. And you start with an evaluation count at 5, 10, or 15,000. You can go all the way up to $2 million, working your way through the steps. And the best part of all is you do actually earn a percentage back in terms of profits from whatever you generate. So there we go. We are going to run. Really appreciate you coming along today. Hope you've enjoyed it. We will be back next week. Can't say which day it will be, but if you're on Anna's registration list, which I'm sure you all are, you will get details of that. I'll get those out to you at the weekend with a bit of luck, and you'll have all the links to register for the next series. So thanks very much indeed for coming along today. Hope you've enjoyed it, and see you again soon, and bye for now.